I think when we spoke last week, we were talking about where we thought the week would end up. I think you had said 1100. I had said 1075, if my memory's right. So we had been kind of expecting a drop or a consolidation level. Are you surprised that it happened today and by the magnitude of it? I mean, this is a big move.
In my head, Elon did the Twitter poll over the weekend. He's acting fast. He had his investment bankers sell half the shares in blocks yesterday and half the shares in blocks today. And that yesterday they took up most of the liquidity they could, but there wasn't enough to extend it today. So it's causing the price to go down even more dramatically to find enough block buyers for the other half of the other 5% of his shares he's selling to the street. He doesn't care if it throws cold water on the stock. In my head, my pure speculation, Elon's closing out the last of his 10% sale of his Tesla stock today.
Obviously, it's been incredibly volatile and on an upward trajectory leading into this week. So it's not entirely surprising that you have a major gap down. I think doing this ahead of a announced stock split, I think is seeming increasingly probable in my mind. I hesitate to even call it pain because like we're still up way more than we thought we'd be relative to like a month ago. So let's not get too down on ourselves.
We hope the stock split increases sentiment and makes the price go up, but it's entirely possible the market does what we don't expect and there's a stock split and the stock goes down even further.
There seems to be a theme emerging with Elon where he's trying to mitigate the attack vectors, as he's called them, that from which people criticize him. Like, what's left to criticize about the way that he's handled this situation? I mean, you want to tax the billionaires? Okay, great. You just this billionaire just paid more taxes than I'm not aware of anyone paying a tax bill of this magnitude ever, frankly. I mean, it's almost like he's kind of creating a model for direct democracy.
Whatever Elon's doing here. I'm in favor of his transparency for sure. If we weren't so heavily invested in Tesla already, I'd say this could be a great little buying opportunity.
I'm sure implied volatility on options is through the roof right now. But if it wasn't, there may be some sort of play to say, all right, well, if a stock split is announced and maybe it goes up like 20% from here, maybe there's a nice return opportunity for there. That's probably a little bit too speculative right now without actually looking at options prices. But I do think, generally speaking, this might be a nice kind of local low. I think 2022 is just going to be a crazy year with all the, Berlin and Austin coming online and full self-driving. I think is going to do more for margins than people really realize.
The biggest kind of medium-term bullish sign, I think, is the China numbers. If the Chinese factory was indeed shut down for 7 days, and if that 7-day shutdown results in a direct proportional number of less cars being produced and delivered for October. If those two things are true, and they announced that based on the numbers they produced yesterday, there's a huge beat for potentially like 300,000 cars delivered in Q4 of this year.
It definitely seems like a very bullish kind of surprise.
Imagine what their gross margins will be with their operating leverage. If they deliver 300,000 cars and the Chinese cars, they've had the historic exports in October versus other quarters. Mm-hmm. If they're exporting even more cars, which they've said is their most profitable car, they've said that's their most profitable car is exports from China. But if they can ramp up the production to that level with their operating leverage, I mean, gross margins could be off the hook. Could be like 35%, 33%. I don't know, instead of 30%. Yeah, there's a lot of really good potential upside surprises for the news cycle with Tesla. I think Tesla likes to do things in-house. It's just like a side bet on their entire business. Sure, they want to keep it a priority along with everything else, but it's not their top priority.
With Tesla, I think the synergies wouldn't be as extreme. Whatever they would end up getting from a company like Metro Mile wouldn't be useful to them necessarily because it's not in the format of the data that they're getting off their vehicles. I think the only thing that they could be interested in acquiring maybe is those registrations.
I mean, I think the underweight portfolio managers were under a lot of pressure. Some of them are stubborn, like they're just firmly in the bear camp. If you're in the investing profession and you can't understand Tesla and you've been so wrong on it, then that's the wrong profession for you, in my opinion.
I don't think necessarily big movements like this will cause anyone to buy necessarily. I think there's probably more buying pressure on the way up. So I think if there's a quick rebound, then you can get some buying pressure from underweight institutions.